How to finance your first small multifamily building. So, small multifamily is a great way to get into apartment investing so that you can build wealth and set yourself up for bigger and bigger deals. So, we're going to be covering the five main ways to finance a small multifamily, as well as some frequently asked questions. And as always, if you have any questions, just drop them in the comment section below. Little background, myself personally, I own a few small multifamily and I have my top lender, Alex, with me, who's financed a bunch of these. So we have some subject matter experts, you could say.
Let's get
All
into
right.
it.
All right, let's jump into it. So the first one is going to be FHA multifamily. This is what most people like do when they're house hacking, and you live in one unit and then rent out a few other units.
Yeah, FHA is probably the most popular. I get asked about it the most, especially with even maybe a first-time home buyer that's just trying to get started in investing in real estate. So why is it the most popular? Mainly because of the down payment. You can put as little as 3.5% as the down payment, and then there are some other benefits where you can have lower credit scores. So your credit score can be as low as 620. There is, so like the negatives about FHA would be mortgage insurance. So there is monthly mortgage insurance and there's upfront mortgage insurance. But overall, if let's say you're buying a 4 unit and you can rent out 3 and you only have to live in one of them, usually the rental income will cover the majority of the payment, or maybe the whole payment and some, so you make a little money off of it while you're living there.
Okay, so the main point is, with FHA, you can buy up to a 4 unit building, and you have to live there for a year. You do have to pay the mortgage insurance. My 4 unit, I bought it for I think like $495, and I pay I think it's about $350 a month in mortgage insurance. And the mortgage insurance is required because you're putting such a little amount down. You only have to put down 3.5% with FHA, which is pretty nice if you're a first time buyer.
Yeah, absolutely. And actually, the guidelines just changed on FHA. So earlier this year, they actually lowered the mortgage insurance premium monthly. So that's even more of a benefit. I think they lowered it by like 30%. So that's a huge benefit for people looking to buy multi-unit right now.
Nice. And just another note, the property does have to be in livable condition. The FHA appraiser is going to want to see like no bars on the windows for the most part. Just has to, like, you have to have appliances. There can't be anything like egregiously wrong with it. It can be like a fixer upper as long as it's livable.
Yeah. Yeah, actually, I have done a FHA 203K loan with a multi-unit before. So, if you're trying to, let's say, renovate it because it's just not livable, you can do that. The process is super difficult with FHA, so just keep that in mind. Like, make the closing date probably 60 plus days out, because they're going to need all your plans and specs. It needs to go through an FHA consultant. So it's a lot of work, but it is doable. And you can put 3.5% down on the total cost. So like the cost of the property plus construction, and you just take 3.5% down off of the total cost.
And that's, it's still FHA, but that's FHA like 2 or 3K, where that you could buy a fixer upper in almost any condition, because you're going to be putting, I'm actually doing one of those right now, or I'm the listing agent on one, and it's been delayed, and I think they're doing like 50K worth of renovation. So you can do a substantial, they have like, I think it's like limited ones and then more intensive ones where you're doing much more renovations. But yeah, that can be a pretty drawn out process. So we typically recommend like just the standard FHA.
Especially if it's your first, like, it's already difficult enough, like buying your first property. So if you add on renovations, it can be time consuming and difficult. But definitely FHA is the most popular product out there for multi-unit. So definitely recommend it for someone looking to buy their first multi-unit.
Okay, next up we have the VA loan, which is also, I know a lot of veterans also do this. It's kind of similar in some ways to FHA. You can buy up to a 4 unit property and house hack and start building your wealth from there.
Yeah, exactly. VA is probably the best product out there. The only problem is you have to be a veteran, so you're limited. Like, not everyone can do that product. You have to be active or used to be active in the military, so you can put 0% down. There is a VA funding fee typically, so there is a little cost, but it is 0% down, and you can buy up to 4 units. You can also have a pretty low credit score, as low as 620. And then you have to, like both FHA and VA, you have to live in one of the units. So just keep that in mind. It has to be your primary.
It has to be your intention to live there for at least a year.
Yeah, exactly. At least for a year. Most people, if you're trying to house hack, like they'll buy their first, live in it for a year, and then buy their next property. So if that's your plan to have multiple properties and you're a veteran, definitely go VA route first, because you can only use your VA eligibility so many times. So if you want to put 0% down on a multi-unit, use your VA first, and then it'll free you up with some extra cash, to buy the next property. Because you can really only have like 1 or 2 VA loans. You can't have, because basically your eligibility gets tied up in the properties.
So if you're eligible, if you have like $1 million eligibility with VA loan, you could use like $750K of it on one property, then potentially the rest on another property. But
yeah, so like if you want to buy another property using your VA eligibility, you have to, like, there's a calculation. You have to like pull your certificate of eligibility, and usually you have to put like a large amount down on the second property if you want to use it again.
Okay.
So I've never seen anyone use it. I've seen someone buy like a multi-unit with VA. I've never seen people like buy multiple multi-units. I'm sure it's doable. I've just never done it.
You'd probably have to do it in like different areas, and probably a lot of loopholes and different hoops you have to jump through. And
exactly. And like VA is like, you got to live in the property. So it's got to make sense, So I guess for a veteran, usually if you're active duty, you're usually, in different locations every few years. So it's possible, to do it that way.
And then with VA, there's no mortgage insurance, even though you're not putting anything down. You're putting the funding fee, which is like about 2%, but you're not putting there's no mortgage insurance required, which is nice, because FHA, you have to pay that mortgage insurance.
Yeah, exactly. I mean, VA is by far the best route. It's just you're limited. If you're not a veteran, then you have to go FHA or conventional. But if you're a veteran, definitely take advantage of, and you're trying to buy a multi-unit, use the VA loan. I mean, it's the best.
And this is a whole nother conversation, but you can also, VA loans are assumable. Actually, FHA loans are assumable too. So
definitely.
If you find the right seller, you might be able to assume their loan.
Yeah, especially like, a lot of people are looking into assuming loans right now, just because rates were so much than they were at the, probably 15-year, interest rate. So anyone that bought their house in the last 10 years prior to, 2022, you probably have a much lower rate than the current rates right now. So look into assuming it if you can, but it's hard to assume, because you have to pay the difference between the sales price and what the actual current note is. Yeah. So like, most likely someone bought it for way less, and you have to put like hundreds of thousands of dollars down, so like it doesn't always work, but it's something to look into if you have the cash available.
Right. Okay. The next way, so there's FHA, VA, and then there's also like traditional conventional, where, it might just be like a rental property loan. You just want to buy it as a rental property. You're not going to live there at all. And with those, you're going to have to put down usually usually like 20 or 25%, right?
Yeah. So that's a problem with going conventional. You have to put much more money down. So 20% down is usually like a 2-unit. And then if anything between like 3 and 4 units is 25% is the down payment. Mm-hmm. Also requires much higher credit scores. You probably want to be like at least 680, but you probably want to be higher than that, even just because the terms will look pretty, like, basically conventional is more sensitive to credit scores. FHA and VA, like, you'll have very similar rates between a 620 credit score and a 760 credit score. It's just like, it's way better for lower credit scores, or conventional, you just don't see a huge difference. I mean, you see a massive difference, but between the like lower credit scores and higher credit scores.
And then the interest rate, because it's an investment property, like principal versus investment property, the investment property is always going to have a higher interest rate, higher mortgage rate, right?
Yeah, exactly. I mean, so if you're going to buy it as an investment property, it'll have a much higher interest rate, especially right now. So like usually I would say maybe 3/4 to 1% higher than a primary residence.
Gotcha. Okay. And real quick, 10 seconds. If you're watching this and you're looking to buy small multifamily, reach out to us below. I'll put my info below. and we can help you out either finding an agent. Alex can help you get qualified, get approved, so you can have so you can start making some offers and getting some good deals. Okay, the next way of financing is really just owner financing, and we don't see this too often. This is more like sometimes it's more off market. You see this like owner financing and sometimes subject to, which are kind of two different things. Like owner financing is typically when the property is just completely paid off. I actually just did one of these. The owner didn't really cash, and they just worked out an arrangement. I think it was like 7.5% interest. So it was kind of higher. And then you had to put, I think they put down like 20%. It's completely negotiable, interest rate and how much you put down. But sometimes if you find the right owner, maybe it's like 1 in 100 owners would be open to owner financing. So you don't have to
Isn't
go
it
through
usually like a balloon payment, like it's due within like 5 or 10 years? Is that kind of what you see?
Yeah. The one we had set up, it was a 2-year balloon payment. So they either had to pay it off or refinance within 2 years. So it's
Yeah.
not like you're not getting the 30-year. I mean, I guess theoretically you could get a 30-year note from the owner, but typically it's going to be more like short term. And then subject to, which is more of a gray area. I haven't really done. I was actually looking at one, but the numbers just didn't make sense. That's basically where you just take over the owner still has a loan, and you basically just take title to the property, but then the mortgage stays in their name and you just pay the mortgage. And you really have to find like a motivated seller to kind of do that. So that's more in the off market world. We see those sometimes. The next one, and I've actually done this one before, is hard money or private money, and then basically refinancing that into a conventional. So there was a property I bought a few years ago. It was a 4-unit, and I bought it with hard money. I bought it with private money. So, which is kind of the same as hard money, but it's just a person instead of like an actual company. So they loaned me the money. And then within 12 months, I refinanced it because I got a good deal on it and I did a little bit of upgrades. The banks usually need about 25% equity to refinance. And so after about 12 months, I had enough equity where, I could just refinance it into long-term debt. So that's another option. If you come across a really good deal, you can reach out to a hard money lender. And I have a few lenders I can recommend as well for that type of thing. All right, let's talk about frequently asked questions when it comes to small multifamily. So number one, do you have to live in the property?
Yeah. So, I mean, it depends how you're doing it, but yeah, if your intent is to do it as a primary residence, you'll get all the benefits for like, if you're a veteran, you can do a VA loan, or FHA requires you to be to live in the property at least for a year. Conventional, you can purchase it as an investment property, but your rate will be usually higher than if you buy it as a primary. And yeah, like, so those are pretty much, you're going to sign an affidavit saying you're going to live in the property within 60 days of closing, and your intent is to live there for a year. So,
So
if
you
you're
have to
house
move in
hacking,
if you
then
want to do.
you know,
Yeah, I
yeah,
was going to say
exactly.
if you want to do some updates, you have 60 days basically to do any upgrades. And I mean, unless you're doing FHA 2 or 3K, we're not even really talking about that right now. That's a little bit different, but just a standard FHA, you would have 60 days to move into the property, maybe some updates if you want to, and then you'd have to stay there for a year, and then you could rent it out.
Yeah.
And then
Exactly.
something that's pretty cool with these is that you can use the rental income from the other residents to help you qualify for the loan.
Yeah, I mean that's a great point. So with all these products, if you're buying it as a primary residence, most of the time, like you're buying a 1 unit, right? So you can't use any income even if you plan on renting out a bedroom. If you buy a multi-unit, however, you can use the other units to help you qualify. So that rental income will be added to your income. So it'll lower your debt to income ratio. So you might be surprised on how much you could actually qualify for. The rental income that is used is based on what the appraiser comes up with. So, when you're trying to figure out if you qualify for it or not, you don't really know until you get the appraisal back. So just use a conservative, like talk to your realtor if you're working with Jeff, or whoever. Make sure you talk to your realtor to get some comps on like what it could rent for. And then just take a conservative figure, because you can only use 75% of the total rental income from all the units. So just keep that in mind.
Yeah, because the one that you did for me, it was I think the tenants were paying about $3,600 per month. It was a 4-unit, 1 unit was vacant, 3 units were occupied. So I had an extra $3,600 coming in, times 0.75 coming in every single month. So that helped me to get approved for it. Can you use FHA or VA more than once?
Yeah. So we kind of went over that with VA already. So yeah, you just have to put more money down. FHA is also a little odd where like you can have two FHA loans, but they're strict on like it has to be a certain distance from your other FHA property. So I think it's usually like 100 miles. I have to look at the guidelines, but I think it's around 100 miles.
Mhm.
You can also exclude the 100-mile rule if your family size is increased, right? So you have a larger family, you need a bigger house, and then also a job change. So if you have a job change, that's another reason to have two FHA loans. It's rare to have two FHA loans, but I've
Yeah.
seen it before.
And another good idea would be to, let's say you buy your FHA or VA multifamily and then you get a good deal, values go up. And then maybe after a few years, you refinance it into like a conventional loan. And
Yeah.
then you'd be able to use that FHA or VA again, because you could just kind of keep repeating that process really, if you wanted to, up to a certain point.
Absolutely. Yeah, no, that's a great point. Yeah, that's kind of your end goal, right? I mean, FHA is a great product to get started, but you want to try and get that mortgage insurance removed. So the way to do that is once you have enough equity and rates are at a good level, just refi out of the FHA.
Gotcha. As far as the loan limits for FHA, VA, conventional, so you can look that up. Each state is going to have different loan limits, but I know FHA can go up to, I think, like up to like $2 million for like a 4 unit if you're in a high price neighborhood.
Yeah, yeah. So I mean, FHA is so odd. So like in this area, like we're in the Washington D.C. area. So yeah, it's like around 2 million. Put 3.5% down, which is unheard of.
Yeah.
But so it's different for how many units, right? So that's up to that's like for like a 4 unit. A 1 unit is like up to I think 1.1. Or yeah,
Mhm.
1.1, and then 2 units would be a little bit higher. So there's different intervals, and every area is a little bit different. FHA in certain others, because I've done FHA in like Florida before, and they have like lower loan limits down there. Like they don't go off of the standard conventional like Fannie Freddie guidelines.
Mhm.
Their loan limits are actually like lower. I've seen down in like Orlando, I did a deal down there where the loan limit was like 350,000 for a 1 unit.
Huh.
So it was way lower than
Yeah.
the standard conventional loan limit. So yeah, just be aware, like wherever you're looking to purchase, just talk to a local lender and figure out like what is the loan limit, and then you can kind of figure out if it's in your price range or not,
Yeah.
for a 4 unit.
Yeah, and they change like every year. So how to find these small multifamily. The best way I found these small multifamily, like number one is just obviously the MLS. So you should have your real estate agent set you up on a search for the MLS. And believe it or not, the multifamily, it's not as competitive as you would think for like the small multifamilies. So you can find some good deals out there. And then another great resource, I actually just did one. Actually, it just closed last week. There's a website called PropStream, and I have a quick like 10-minute tutorial video that you can watch. I'll put the link below. But that's how you can find like multifamily properties, small multifamily in your backyard, essentially. I mean, not every neighborhood's going to have multifamily, but you can pretty much look up in the tax records like which ones are actually approved for that type of thing. Um, what's the first step in getting started with small multifamily? I would say reach out to myself and Alex, and Alex can get you approved. I can either help you out as an agent or put you in touch with a good agent, no matter where you are.
Yeah, yeah. I mean, it's definitely start like even if you're a year or two out. Sometimes it's good just to get an idea of like how much do you need to have saved. What's the price point? Just get an idea like verbally even what you're pre-approved for. So you have an idea of like what to like set goals, right? Like how much should I have saved? Like how much money should I be making? That type of stuff.
Yeah. And then as far as like what type of there's a lot of different lenders, there's a lot of different real estate agents. With small multifamily, because there's more like moving pieces, I wouldn't recommend going with like a huge bank. I'd recommend going with someone like Alex, because he can respond, text, email, you can call him, because sometimes there's just like more things to like take into account, since it's not just like your standard, rental property essentially.
Yeah, yeah, absolutely. I mean, some of the bigger banks, like they're closed on the weekends. They may not answer their phone. So if you're trying to get an answer fast, especially when it's a competitive situation, you just need to have someone that you trust, that's reliable. So definitely anyone who's like local, if you're not looking in the DC area and I can't help you, then I would say look at online reviews and just get an idea of like who has a good track record.
Yeah. And the next question, this is more like how to find a good deal or how do you know if it's a good deal? With small multifamily, it's basically it's almost residential. So we don't really get into like cap rates and NOI and all that stuff. I mean, you can, but it's really you're just looking at the comps. So it's just comparing, like if you pull up the last 10 multifamilies that are similar to this one, you obviously want your price to be one of the lower ones, unless yours is like substantially more renovated, more bedrooms. Having 2 bedroom units versus 1 bedroom units, obviously the 2 bedroom units are going to be more valuable because you can rent it out for a lot more. So on a very high level, as far as like analyzing small multifamily deals, just look at the last 10 ones that are similar, the most similar, and just try to be towards the bottom. And then think of ways where you can increase the value. Like maybe the rents are low. Maybe you could increase the curb, do better curb appeal, cut down on some expenses, that type of thing. All right. Well, if you're looking to buy a small multifamily, reach out to myself and Alex. We'll put our contact info below. Shoot me a text. Would love to chat with you, whether it's the DC market or nationwide. And check out some more videos on the channel. See you on the next one.